Hanson's. You build a cup with a handle in September '04, and you don't get thrown by the fact that you had a couple of weeks breaking down. What happened, you were going through some market corrections, and you were trying to come out of it, but you were still back and forth, and the market had been kind of sloppy. But you did get hit once. The reason I think that you got the red volume in that September 4 period toward the end of that quarter is that the stock kind of ran up rapidly, almost off the bottom, and went straight up, and it had to adjust for that fact. Then it base built again and finally came out, and you're buying on volume there. And you add on the 10-week line, and you had a little shakeout on volume, but it holds at the 10-week line. And you come out of a little basing area there. I don't know why we call that a box or what, but you had 1, 2, 3, 4, 5 weeks, and you break out on huge, huge volume. And then you pull back and you add at the line again, and then you run up very rapidly, but this time you go through a channel line, and you'd sell into that. After that, you're going back and forth, base building. You do have 3 weeks tied in there, which is helpful. When you had a clear-cut bad drop below the line, the red line, the volume didn't really go above average. You did have volume pick up a little bit above average on that small spread, and it was closing in the mid-range. And then the next week, you closed down, but in the upper part of the spread, and it was lower volume. So your volume is not giving you any indication, hey, I'm really getting pounded and I need to pay attention to it. So you come up out of that and you buy. We have the dashed line down showing that you don't always have to necessarily wait for it to go through one of the peaks there, that you're drawing a downtrend line, and as it comes up through there in volume, you can buy there. It gives you a slight advantage. Now, we run up quite a number of weeks, and it looks like that we're starting into a new year in '06, and it says do not buy. 4 weeks is not a base. So here's this little detail again. A flat base is 5 weeks or more, and this is 1, 2, 3, 4. So it's not a sound base. So don't buy it. You're just buying something that's very extended. Then it corrects, and it shakes out all those people that bought there thinking it was a flat base or that was going into new high ground. So you have a good shakeout, and then you turn around and come up and give yourself a proper buying point. And the red week that closed clearly below the line was in the mid-range and showing support. So you buy as you're coming out of that. And we have a run that gives us the easy one to figure out, a climax top. It just takes off and runs from 34 to 50 in a couple of weeks, and 37 to 50. So sell into the climax top.